When we released our results for the interim period in July of this year, we said that 2023 was going to be an exceptional year, and so it has come to pass. And after a very strong performance in the third quarter, we're upgrading our guidance again for the third time this year. We're now expecting net interest income to be above 3.75 billion. We're expecting NIM to be above 3% for the year as a whole, and we're expecting our ROTE to be above 20%. At the same time, we're delivering a very, very strong capital print with our CET1 ratio at 16.2%. And I think what's driving this performance is a mixture of three factors. Firstly, the Irish economy remains very robust, particularly on a relative basis to the rest of the Eurozone. Secondly, we're obviously benefiting from the change in the monetary policy environment. But thirdly, I think that the numbers we're seeing today are the financial manifestation of the successful implementation of our strategy, which has seen us growing our organic business cautiously, conservatively, but at the same time maximising the opportunity presented by the departures of Ulster Bank and KBC from the Irish banking landscape. We've acquired 2 loan books from Ulster Bank, and we've been more successful than any other financial institution in attracting migrating customers to AIB.
The NIM expansion story is a fascinating one. I can see what looks to be a 10 basis point improvement here from 3.9 to 3% versus previous guidance. This is at odds with what we've seen across UK banks in recent weeks, as they've reported that there's now this compression on the NIM because there is competition for deposits. Are you not seeing that in the Irish banks because some of the competition has just been reduced in recent years?
Well, we continue to have a very, very competitive landscape. And while we have seen 2 banks leaving the Irish market, we continue to face competition on a product basis from multiple competitors. But we're very, very satisfied with our performance, very satisfied with the continuing inflow of deposits that we are seeing, and we're very, very satisfied with where our pricing currently stands. Now, we're not expecting to see a material reduction in NIM, that we don't see that on the horizon, certainly to the end of this year. And that's one of the reasons why we have upgraded our guidance for the full year to now expect a NIM north of 3%.
Colin, thank you so much for the time. Arabile here. I wanted to actually also just ask about the government's decrease sort of in their shareholding to below that 50%. Does that provide you with more autonomy to get, that very strong third quarter performance out as you have, and for the rest then of the year that you expect to continue to see more growth? Does that sense of more autonomy help, or has it just always been the case for you and you've continued to see this growth?
Well, the government has never interfered in the commercial operations of the bank. That said, we very, very strongly welcomed the decision of the government to reduce its shareholding into a minority stake, which it did in June of this year, at the end of June of this year. The stake is currently below 46%. Our job is to ensure that the bank continues to have a strong investment proposition to present to the market. And the timing of any future share disposals by the minister is entirely a matter for the minister. But obviously, we would warmly welcome further share sales by the government.